Hey guys, welcome to another episode. Reversals are what keep most traders from placing a continuation entry in the market. They keep asking, what if the market reverses? Well, what if I told you today that there's an ICT trading strategy that combines precision and high probability setups to spot these reversals with ease, and make profits off of them with an insane risk-to-reward ratio? Traders call it the ICT Unicorn strategy. It's a rare, high-impact setup that, when mastered, can change your trading game forever. Stay tuned, because today we're going to discuss the key elements that make this strategy effective, the conditions where you can find it, a live back test to emphasize its importance in different market conditions. Before we dive in, please give this video a thumbs up, subscribe if you're new, and turn on the notification bell so you never miss out on our profitable setups and mind-blowing trading discoveries. The ICT Unicorn strategy isn't just another entry. It's a refined combination of institutional concepts, fair value gap, FVG, and breaker block. This strategy works because a breaker block overlaps with a fair value gap, creating a strong confluence zone and alignment of different setups pointing in the same direction. Institutions react heavily to fair value gaps. When combined with a breaker block, this zone becomes a high probability area to trade. Before we go deeper, let's briefly explain these two key concepts: fair value gap. A fair value gap is an area of inefficiency or imbalance in price caused by a strong one-sided movement in the market, leaving a gap between consecutive candlesticks high and low. This gap is mostly caused by large institutional orders driving price aggressively in one direction. When a fair value gap is created, it acts like a magnet. Price will likely return to fill it. Breaker block. A breaker block is an order block that fails, which then becomes a key level of support or resistance when price retests it. Now, how does price react to this setup? When price creates a low, a lower high, and then breaks the low, traders naturally focus on the lower high, expecting price to continue selling if it reaches there. However, when price neglects it and breaks the lower high instead, the order block situated there automatically turns into a breaker block. Similarly, when price creates a higher low, and then breaks the higher low, traders expect buying to continue. But if price neglects the higher low and breaks it, the order block there becomes a breaker block. Now, when this breaker block overlaps with a fair value gap, we have a unicorn setup. Since institutions act aggressively on fair value gaps, combining it with a breaker block creates a high probability trade zone. Let's look at a live chart example. But before we continue, make sure you watch this video to the very end, because we're going to identify this setup on gold that will serve as a signal to trade with this week. Let's continue. Here, price creates a low, a swing high, and breaks the low, forming a new low. This should have been an optimum sell entry, but price broke through it with an overlapping fair value gap, signaling a unicorn setup. Entry. Place your entry at the overlapping zone of the breaker block and fair value gap. Stop loss. Set at the end of the swing low. Take profit. Target a logical take profit level. As you can see, price tapped into this zone and moved away immediately. This setup aligns perfectly with smart money concepts, giving you confidence in identifying trend reversals. Because looking closely, this is a change of character showing that the prevailing downtrend is over, clearing your doubt. Example 2. Bullish unicorn. Setup. Price broke structure, creating an order block. Instead of respecting the order block, price broke through it with an overlapping fair value gap. Unicorn setup. Confirmed. Entry. Place your entry at the overlapping zone. Stop loss. Below the swing low. Take profit. Target the next supply level. Again, price retraced into the zone and reversed sharply. Try backtesting this setup yourself to see how it performs. You can use this as a higher time frame confirmation, a reversal setup, or trade it alone. Key elements that make it effective. The only two things you need to look for in the unicorn setup are a breaker block, and an overlapping fair value gap. That's all. That's your high probability setup. Where can you find this setup? This setup mostly appears when the market is about to reverse or change direction. Let's check out our final example. Here price forms a low lower high and a lower low. Price breaks the lower high with a fair value gap overlapping 1/2 and 1/4 of the breaker block. Price taps into the zone and moves upward, confirming a bullish reversal. The same concept applies in bearish scenarios as well. Special gold USD signal for this week. Before we wrap up, let's take a look at a trading signal for gold USD based on the setup as we promised. For the past week, gold, on the daily time frame, broke an order block, turning it into a breaker block with an overlapping fair value gap. This signals a confirmed unicorn model. If price reaches that zone, we expect a rejection in the upcoming weeks. However, a confirmation will be needed on lower time frames to secure a high risk to reward ratio. We hope you enjoyed this insightful video. If you found this valuable, smash that like button, subscribe if you're new, turn on the notification bell so you never miss out on our profitable trading setups. Comment below on any topic you want us to cover next, and see you in the next one. Thanks for watching. We appreciate your support.